In this video, traders, I'm going to talk to you about my favorite chart patterns at the moment. Stay tuned. Hey traders, warm welcome to you. All right, so behind me, you will see a selection of chart patterns, and in this video I'm going to have to move around a little bit so you can see them, but I use this whiteboard to brainstorm a lot of process and things about how I wanted to refine things going forward into the new year. And I thought, you know what, let's leave some of these charts on and I can do a YouTube video and maybe you guys can benefit from it as well. So I've strategically moved this one down to here so I can have the light so you can actually see what's going on, but I think you can see all of them anyway. I'll move around and I'll kind of explain bits and pieces as we go through, but they're all there. You're not missing anything there, even though there's a bit of light there. That's blank because I've moved it down to here. So let's get going. These are really some of them are daily patterns, some of them intraday patterns, some of them a bit of both. I'll talk through briefly why I like them and also some of the background why I think they work and why I kind of tend to wait for these. So let's start off here in the top left. So this is an intraday pattern, and really if you think about the process for me is this, for these patterns anyway particularly. Now this isn't exhaustive, there's other stuff that there's intraday, maybe scalp opportunities that are slightly different, and I've got different ideas and different sort of systems if you like, not systemized stuff, but some of standalone ways to do business that don't include this, but this is kind of bigger theme stuff. And it starts off at the top from normally if we've had some kind of data or some kind of catalyst. So at the moment, it's why I kind of drew this out and filled up this whiteboard, all kind of process and stuff, is that at the moment we're getting a lot of data coming out for the inflation, right? We're seeing the Fed saying something, then we see jobs numbers coming, then we see CPI, and we see this and we see that. There's a lot of news flow. And so that's affecting the market quite a lot. A lot of people are positioning based on that, whether it's bullish, bearish, etc. So that's the backdrop really for some of these things. And again, some of these are intraday stuff, some of them are kind of bigger stuff. Anyway, enough introduction. Gap. So this is really pretty self-explanatory. A lot of them, there's nothing revolutionary here, but this is when you kind of get this drive up and the market gaps against that direction and starts to push lower. So we've had push, aggressive move, and then for whatever reason the market gaps lower and closes at lows. That's interesting because either intraday getting on that wave lower or moving to, I'll talk about in a moment, a day two play. Some of these are kind of linked together as well, which I'll explain in a moment. So gap is when it's surprising people. So you've got the trend, it's gapping against the trend. It's not kind of pushing down and pulling back up, it's pushing down, it's closing near lows. So it's an intraday opportunity to get short on that, or a day two opportunity, because a lot of people are kind of trapped. And a lot of these you'll see is me trading against trap traders, me thinking about who is the crowd, what is the crowd doing, and is the crowd going to add fuel to the fire trying to unwind positions they don't want to be in. So there's that, there's the gap. Next one, you guys are very familiar with this, is the flag. So this is a good intraday pattern as well. The market pushes up, starts to hold at highs, and then breaks out to highs. Good daily pattern as well if you're aligning with the daily, and then maybe you're trading opening breakout. So you might have a daily chart as push, flagging. Looks like it's about to break the high of the flag on that day. Then I might trade an opening drive, might trade an opening breakout. Again, these are all kind of linked up. So it's that flag pattern, which just exhibits strength. And if you can just see that, if you can on here, these are a bit smaller than normal, the little dip below the support before it rockets back up. Okay, so gap flag. Let's move to this one, which is a really strong trend. So if something's got a really strong trend after a catalyst, it's been pushing, and you've got I talked about this before, 5-period moving average is keeping up with price, price is very strong. The kind of first close below after kind of 8, 9, 10 days worth of close above you can kind of look for the next day to be strong in the direction of trend. This was inspired by Linda Raschke. She did some work on this. I've done my own work on it, looked back and all the stuff, sort of some data with that, but inspiration came from her of seeing this kind of really aggressive 5-period moving average pushing up, and then you get the first close below, and then the next day very often it closes back above, or the next couple of days it closes back above. So it's trying to find some sort of bullish pattern off the open or during in the day, maybe a flag after a drive for a further push to high. So that's quite good. Don't trade that so much, but it's on there. It was on there with the kind of list I was doing. This one I do like a lot. This reversal trapped traders. So this is an intraday pattern. This is when you have, again, a catalyst, market's moving, everyone's good, it's all bullish, all of a sudden it kind of rolls back over. And people are kind of buying on the way down, buying. And at some point they're like, this isn't going higher, this is going to capitulate, it's going to go lower. And it's taking that kind of aggressive momentum to the downside that's caught all the trap traders out in the upside in the morning, so the bulls are trapped, and that's adding fuel to the fire. So triggers on those kind of trading through the lows, trading bear flags, trading range break fakes, look at that moment, pullbacks, that type of stuff. I really like those, both angles. So sometimes you get the kind of drive lower that pushes higher, and actually as I'm filming this now, that is kind of in progress. We've had a big drive down on data. Market's kind of not really pushed to lows. It's not quite the same, but it's that type of thing. You've got a lot of people who are trapped, and it's starting to rally a bit now. Who knows where it ends the day? So there's that. I really like those. The afternoon breakout, shared that a lot, and that is a module in the price action course as well, the afternoon breakout, predator strategy, and that's where you get this really big strength. Again, I prefer it when there's a catalyst to it, but not always, don't always need a catalyst. And by the way, let's just add this. The catalysts are not just for that day, they can kind of keep going for multiple days as the market's still responding and calibrating to the new data. So if you have some kind of surprise interest rate announcement one way or the other, then you might get multiple days where these are valid and the market's still trying to adjust and find some calibration, some supply-demand balance. So it's not necessarily just after data, but I like these more. They're a bit more of a kind of bit more weight and grade A quality if there is a catalyst driving them one way or the other. Best personal, it doesn't necessarily have to be that. This is the afternoon breakouts. The market goes up, holds at highs, and then the afternoon it starts to rally and ends up closing at even higher highs. Great little trade, that good, easy to filter for. And if you're using the catalyst, like, okay, has anything got a catalyst on it? Is it at highs? Is it up a decent amount? Let me eyeball the chart. Is it holding above the VWAP? And then you kind of just got stop entry orders to get in if you want to play that game. And you can quite easily structure a stop loss on that. Can you see this one here? Yes, I think you just about can. Range break fake, some of my one of my favorite patterns, if not my ultimate favorite. You're sitting in a range, could be a flag, could be anything broader range, breaks out of one way and then goes the other way. So when you combine that with a good daily chart, when you combine that with a catalyst again, these are powerful. And these are powerful. I like it because you can structure the stop loss on it. You can just generally, you know, really get your teeth into stuff. There's places to add to it. It's just a nice structured trade, and you're trapping people because you're going below first and you're pulling back up. So you've got your stop below the low. You can add to it. You can be aggressive. It just ticks a load of boxes for me, and especially again if you're adding that fuel to the fire with some kind of fundamentals that are driving the higher time frame money, just perfect. And again, that's in the price action program. Okay, so what have we got? You can see this one now. This is the surprise reversal. So it's reversal trapped. It's similar. It's similar, but it's more a case of you're shorting it a little bit earlier. So the reversal trapped is when they're really going through the lows. The surprise reversal's a similar pattern, but it's just that you're getting a little bit more aggressive earlier on. So it's there, but for all intents and purposes, it's the same type of thing. Okay, day two play. I think you can just about see that as well. Yes, great. Day two play is when you have the day one rally, strong strength. Could be from that. Could be from that. Could be from that. Could be from this, but you're looking for the next day. There's patterns on the second day. Second day is very often we retest the extremes of the trend on the first day. So you can play that type of thing. You can play the range break fake in the direction of the trend. And very often we get a test against the trend early on in the day and then it pushes back up. So it's that day two play. And there's a few little nuances and triggers that go with that, but the main structure of that is within some of these broader moves, the daily chart moves. So day two play, pretty powerful. And that's good if you can't be there for day one. So if day one's happening, the market's ripping off, you're not there, you're not available, not doing stuff, you can structure nice trades for day two. Easy to screen for as well. If you want to screen basket of stocks, universe of currencies, whatever it may be, go, hey, has anything had an extreme day one? Catalyst preferred, but not essential. Can I trade day two, i.e. trying to buy a dip, trying to buy a range break fake, trying to buy a flag off the opening drive, that type of thing. All right, data scalp. I know I've included this because now and then, on the right conditions, I like to kind of play this spike in oscillations on data. Less so at the moment because data tends to reprice things. So we tend to get big movement that doesn't often come back, especially on big data. But if you're trading like second tier, third tier data, then you get these oscillations, as you know, if you watch the market, it just whips up and down. And you know, if you're kind of there watching the tape, this isn't like, you're not going to go crazy size and be mad here, but sometimes you can just see that turn, and that's something I like to just sort of do and just see, wait for it to kind of run out of steam, start to turn the other way and just see if you can kind of get a decent risk reward push back to the open. If not, you come out straight away. It's not a massive edge there, but I do believe there's some edge. Okay, let's go to this one, opening drive. So the opening drive, this is classical type of trade. You know, the market's ramping off the open. Again, we're combining it with something like it's, you know, it's already pulled back to the SMA, or the 5-pip SMA. It's been on a flag on the daily chart. It's had a gap. It's a day 2 play. It's been a surprise reversal for the next day. So we're adding these, compounding these up. So the opening drive, we see the flag, boom, rallies. We know the flag type pattern back here. You guys are familiar with the flag. And I like to use a 2-period rate of change flip sometimes to time it. I'll probably do a video completely on that at some point because I don't want to gloss over it too much, but essentially we're using this rate of change. I'm not a huge fan of it, but sometimes it's very difficult to time that rally or the buy in the rally, and you want to just buy that first little pause, and sometimes not a nice clean flag, sometimes not a pullback deep enough, and so this is just an extra thing of like, oh, it's not great, but if I can buy it there, maybe I can add some more, I can build into a position that I really want. Okay, time of day theme, let's have a look at that. So time of day theme, again, this is something I talk about a lot. The time of day theme is really where you're hunting for those intraday algos that are coming in, and you might be like, oh, you can't spot the algos, and yeah, okay, you know, to a certain extent you're correct. However, if you go back and look, very often at specific times of day we have specific movements, you know, top of the hour, bottom of the hour algos, and they don't carry on forever, right? You can't just say, oh, well, I'm just going to buy at 8 o'clock at night every night and be rich. No. Yeah, but you do sometimes have themes where you go back and go, hey, listen, the last 3 days we had a big spike at this time. We've had a reversal, trend reversal at this time. European close tends to be this. And you start to see little patterns that can run for a while. And so your job as a trader is to combine this with other stuff. So where are we? Going left and right and up and down here. So imagine you were trading this reversal trap traders, and you saw that spiking right into, or actually you wouldn't be doing that. This sort of spike here, let's say that sort of spike here was normally at a time we saw a bit of a selling flush. You might compound that, add that to say, actually, I'm going to use the time of day type of theme along with a technical pattern to add weight to the trade. It's flagging, it's dipping below the low, it's about the time I expect it to reverse. I'll use that, and if it happens, I'm getting extra bonus. If it doesn't, it doesn't. Day of week theme and end of month theme. So these are kind of themes that I like to look at and study myself. Do we have some kind of structure? Turnaround Tuesdays, there's some validity to that. So if the market's kind of been, you know, down Mondays and kind of pushing into afternoon, or pushing morning on Tuesdays. Again, if you're lining up the dailies, you want extra weight to it. Very often we get a reversal off that. If it's pushing into a Friday high, you know, there's all these type of little things that you probably know for the market you're trading. So day of week theme, again, combining it with some of the bigger patterns. End of month theme, we know this. End of month, very often we get an exaggerated move, especially if we've had trapped traders. So if you've had, let's say you've had this gap, let's just pick some stuff up. You had a gap, it's moving lower. Let's say you've had a reversal trigger as well. And let's say it's kind of really accelerating into lows. It's Friday. It's loads of people have been trapped from Monday, Tuesday up at highs. You know, very often end of the week or end of the month, sorry, people need to square their books off, especially end of the quarter as well, and you often get a real acceleration into highs or into lows depending on the trend that's kind of on the underlying trend. So something to consider as well, and something that provides, you know, could you develop a strategy off that? I think you probably could under the right conditions, but for me it's just a kind of added weight. So if I'm already short and it's the end of the month and I have some cushion there, I might start to get really aggressive and start to say, okay, listen, we've had a reversal break, we've had a trap traders break, we've had a range break fake intraday, I've got a good entry on this, we're coming into the closing bell if I'm trading equities. Hey, you know what? It's the end of the month as well, hold this or add to it, and just maybe add a little bit more aggression to the deal. And the final one, exhaustion. I haven't seen much of those around. Now and then we see them, but it's the intraday chart or a daily chart. And exhaustion is just like a capitulation, right? Where you just see this bang, 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 heavy selling, and you're there to time it and say, right, do I buy the first kind of green? Do I buy a break of the prior high? And some easy way to time it is when the market's down so much, you just say, hey, I'm going to buy the first break of the last 5-minute high of the candle, last 5-minute candle high. So imagine red candle, 5, 5, 5, 5, 5, big one, and then eventually the market trades above the prior 5-minute high or 3-minute high. That can be a kind of reasonable way to get in and quantify the trade and kind of structure the risk, and etc. So those are those basically, guys. I mean, I'll run through them. I'll talk pretty quickly. Hopefully you've been able to understand what I'm talking about. So we've got 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. How many have we got? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. 14 different chart patterns that I like to use, and they're broad, and I've got some triggers that go with it, and it's not an edge. That's not just a total edge. There's other stuff that goes with it, but I thought I'd share them with you. Like I said, I'm doing some kind of thinking about process and what's some stuff on the whiteboard. I thought, great YouTube video. Hopefully you guys will find some value from it. Take care, keep your risk managed. See you next one, bye-bye.